The market has seen substantial periods of selling, and now that we're getting a bounce, how long do we let our positions play out before we start to take profits? So in this video, what I want to do is focus on playing the bounce in the S&P 500 or in the NASDAQ 100 and how that can also relate to individual stocks as well. Because one of the things that gives traders a lot of trepidation is, do I trust this bounce? Do I get out? They get shaken out of positions only to see the stocks rally even higher. And so there's this part of them that wants to say, hey, I want to be able to maximize my profits, but I don't want to get out too early. But if I hold on too long, am I going to get out too late? And so it's really a conundrum, because in a bear market, and I'm not saying we're in a bear market right now, but let's just assume for a moment that we are on our way to being in a bear market. Well, in those bear markets, there are counter rallies, and those counter rallies are much stronger than the kinds of rallies that you see in a bull market. Yes, we're not talking about rallies that go back to all-time highs. We're talking about the velocity, the momentum behind these counter rallies in a bear market that are just much more extreme. In a bull market rally, you get much more methodical rallies. You 3-4 points here, 15, 20 points there. In a bear market counter rally, you get 100, 120 point rallies like it's no big deal. So it requires very decisive and very quick action oftentimes, and that can be really difficult, especially if you're not able to watch your computer at all times. Now, one of the things that you have to be willing to do if you're going to play the counter market rally is to be able to hold your position through some pretty wild swings. August 5th, we had a huge gap down. We were trading 200 plus points down at one point on the S&P 500, $20 lower on SPY. And since those lows were established very quickly after the market opened that day, we put in a bottom. And ever since then, we've been moving higher. So SPY has been able to go from lows of $510.27 all the way up to a closing price today of $533. That's a 230 plus point rally off of the lows. But one thing that a lot of people do is they get sucked in by a candle pattern that takes place during the counter rallies. Now, if you look at this candle pattern right here, you have a gap higher, and then you had this huge move, and it looked like we were just going to continue to rip higher, maybe 150, 175 points on the day, only for us to pull back significantly into the close. In the final hour and a half trading, just saw massive amounts of selling. That candle alone said, hey, there's a heavy amount of selling. People don't trust this rally. People are already looking to get short. I need to get short myself. And then the next day, SPY opens up even higher with an even bigger gap. And then you think, okay, now they're going to be able to rally this thing and rally it right back up to where it was before. But then you see it bog down and not only just give up the day's gains, but give up far more than today's gains and create this ugly, hideous candle. And now, if you weren't convinced by this candle, you look at this candle and you think to yourself, okay, the bears are definitely back in control. They have got it all together. But no, instead, the following day, we gap again to the upside and we hold those gains. And then on Friday, we get the follow through. And so it shows you just how difficult these bear market rallies can be. And it's very easy. And there's a lot of people out there that they saw these two candles here and they were saying, okay, I don't like how big this upper shadow candle is. I don't like how much of the gains that it gave. It shows that the bears are still in control of this market. I'm getting out. And then they see the gap higher and they said, okay, I'm going to go ahead and chase it and get back in. They get back in and then it sells off the rest of the day. And then there's like, oh, great. Now I'm going to go ahead and get out again because this is an insurmountable candle. You just don't come back from this. And then you gap higher again and you just give up, right? Because then you don't get in on this candle because you're like, look, I'm not going to be fooled again. I've been fooled the previous 2 days. I'm not going to be fooled for a third time. And then you watch on that third time, the stock just take off. So there's a lot of frustrations that can take place when you're trying to play these dead cat bounces. So the first rule is you have to be willing to allow for some very big market swings when you're playing these counter market rallies. And that's what you're getting right here. Intraday swings, huge, massive. And then at some point, they usually do get their footing and they start to march higher. Now, look, this one isn't unique. You look back at the April lows. We bottom right here on April 19th. But when you're just looking at this rally for what it was at that time, you got two candles here and you're thinking to yourself, okay, I'm not feeling too good about this one. You're seeing a bounce that's really not holding up too well. And then you fast forward it and then you get one of these big old candles and you're saying, okay, this is a bear flag. We're confirming the bear flag and we're going to start breaking to the downside. But instead of that, what happens? We confirm the bear flag by just a smidge and then we rally right back up again, guys. So that was just the sell-off back in April. And so that is why it is so important to highlight the fact that these bounces, these counter market bounces, whether it's a bottom and we're going back to the all-time highs, or whether it's just a counter market rally, it is very, very difficult to play them right out of the gate because the wild price swings are extreme. So what I like to do is I like to use the anchored VWAP. It's one of the best tools for me personally. It helps me to not get sucked into these sell-offs right here and to get into early, only to watch myself get squeezed at a later date. And here, what I'm doing is I'm using the anchored VWAP. I anchor it to the all-time highs, and I just let this thing come undone. Now, I shorted the market here when we retested this anchored VWAP and we started to fail again. That's where I got short. I was able to cover right at the open. It was an optimal trade. I loved it. Not all trades work out that way, but that was a good one. And now I'm waiting for it. I was tempted here and I was tempted there. There was a part of me that felt like, okay, this thing's going to sell off again and it's going to leave me in the dust and I'm not going to get to enjoy any profits from it. But no, it kept on moving in the days that followed instead. And it rug pulled the shorts that were hoping to get another leg lower. But stock market rallies, especially in the early going, don't perform in that kind of manner. It can be a very choppy event that if you're not taking profits aggressively to the short side, and on Monday of last week, you get a 200-point gap to the downside, if you're not taking profits off of a 200-point gap lower, what are you waiting for at that point? You know that's extreme volume that's pouring in. After that, you get the bounce. You're sitting here at this anchored VWAP, this purple line. It doesn't have to get right up against it, but it needs to get pretty close. It can also go above it. It's not like your traditional support and resistance where you want to see it hold perfectly each time. Instead, it can go above it or below it, just like it did right here on July 31st and August 1st. It goes right above it, and then it comes right down below it. But what you want to see is either a near test or at least a crossover of this VWAP to show that the resistance overhead is kicking back in again. And right now, we haven't seen that yet. The second thing that I want to point out is that just like with sell-offs, where you have to be aggressive with the profit taking, when you start to get profits on these counter market rallies, you have to be aggressive in that as well. There's the fear that it's going to go right back to all-time highs. Well, guess what? If it goes back to all-time highs and beyond, there will be more opportunities to get long as a result. But for the meantime, we haven't seen any evidence that this counter market rally that has taken place off of the lows of 6 days ago is going to be anything more than a dead cat bounce. So we should treat it as such. Again, if we go back in history, I want to show you guys a couple more examples here. The one back in October when we hit the lows following the summer sell-off and that launched that massive rally that went from November of last year to July of this year, this was probably one of the most seamless bottoms that I've ever seen. This does not happen every time. This is more of an exception than it is the norm. And the reason why you have to also be aggressive with taking profits during counter market rallies is because there's a very good chance it's not the bottom that's been formed yet. You take this rally right here that preceded this October bottom. This one rally for about 4 straight days. It looks very promising. But if you didn't start to take profits here along the way, you got completely wiped out and you took a substantial loss as a result. When you take a look at these swings that took place during 2022, these counter market rallies, there was nothing clean about them. They were very difficult, but they offered a lot of reward though as well. For instance, the one from June, this was a massive shakeout right here that almost thwarted the entire counter market rally. But if you put an anchored VWAP right on it, guess what you have? You have some good price areas where you can get short on this market. Now you'll say this one's like, oh, it blew right through it. And yes, it did, but came back down below it. And this candle was your signal to get back in on that sell-off. And you had plenty of opportunity to make more money to the downside. And right again here, that June bottom that we talked about, very rough. You had to have a pretty wide range or wide tolerance for some very big intraday price swings and daily price swings as well. Because when you get these kinds of bounces, it looks like it's not going to work out in your favor. And then it ultimately does. It has a breakout. It makes a huge move to the upside. And it gets right back up to that anchor VWAP and then starts to fall apart again. And then you get a big candle like this, which is your cue to get back into the short side. So fast forward to here. So far, the counter rallies back to the anchor VWAP have been very nice and very orderly. We could see price blow right through this and maybe even get up to like the 543, 544 area and then start to come back down again at some point. And when it starts to come back down again, that will be a great opportunity to get short. Or maybe it's just a little bit in front of it or right on it. But either way, what we're looking for is a rejection. And until we see a rejection in price, similar to what we saw here, similar to what we saw here on July 23rd, there's no reason to short this rally yet. In the end, you're not going to catch every counter move. You're not going to catch every sell-off during a bear market. What you want to do is set yourself up for the best opportunities and take those. If you try to play the intraday swings, there's a very good chance that you'll get lucky on one and then try to apply that same luck to the next trade. And because it was based off of luck, you're going to get burned on the next trade. So you want to be careful of those scenarios. You don't want to overtrade. You want to use volatility in your favor by trading with less and letting the volatility do the heavy lifting for you. And if you miss a move, you miss a move. Not a big deal. In the process, you want to be choosing your spots, picking your places for where you want to get short, not just overreacting to these big intraday and daily price swings, but waiting for it to get back to key levels like I've shown you with this anchored VWAP and taking your moves there. If you enjoyed this video, I'd encourage you to like and subscribe and let me know down in the comments below, did you get back into this market back when the market bottomed on August 5th? If you did, are you still holding? Tell me down in the comments below, what is your plan right now with this market? Are you buying the dip, selling the rips? Tell me all about it. Thank you guys, and God bless.